This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
Don't give up. People most times they give up too soon. People, when they set out to do something, they hit, one or two obstacles, and it's like that picture on the mine, right? Like the miner keeps, chipping away the dirt, and all of a sudden after 3 years, he gives up, and then the next miner comes in. A month later, he hits gold. And don't be that guy. And that goes in life, whatever you do.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Finding good markets for real estate investing is an important element of success. However, investing in the right strategy, in the right market, is what you really need to help crush your goals. Now, the key is to pair the right strategy with the market dynamics. And this includes optimizing cash flow and appreciation while investing in a great deal. Now, today's guest knows all about this. From his very first apartment purchase back in 2012, he and his related entities have been involved in over 4,000 apartment units in the Southeast. Now, today, he is a seasoned real estate professional whose principles are to deliver trustworthy and solid real estate solutions while providing sound strategic investment opportunities. He is currently done over $500 million in acquisition and developments as well, all while creating superb returns, leveraging his proven track record. Now, in addition to all that, he has developed his property management platform, which has serviced more than 10,000 units currently. So definitely knows what he's talking about when it comes to the operational side of things. Now, with all that, let's welcome John Mejia to the show. John, buddy, thanks for coming on, man.
Hey, thanks a lot. Really enjoyed being here. Thank you for the invite.
Yeah, you bet. Now, guys, like what John has to say, you can reach him via the contact page at providenceinvestments.com. Okay, John, go ahead and tell the listeners a little bit about your journey. How did you get started?
So how did I get started in real estate? First and foremost, I don't have a business degree. I went to Syracuse and I have a science degree, and I joined the military after that. And I always wanted to be a pilot. Of course, joined the military, went Marine Corps, then U.S. Navy, became an officer, realized my dreams of becoming a pilot. And I was flying for U.S. Airways. I was the first officer when 9/11 hit. And literally after 9/11, all the airlines were filing, obviously my airline filed bankruptcy. There was 20,000 pilots without work. I was one of them. And in 2002, December 19th, I was furloughed. I was let go together with thousands of pilots. So it was really rough to find a job. Came back to Birmingham, newlywed, and literally landed in Birmingham. And within a month, I found another job flying for a corporate company here in Birmingham. And unfortunately, that company went into trouble. CEO got into some mess, and they the company went under, and they sold the airplane. And there I was 3 months later without a job again. So flying was not in the cards for me. It seemed, at least that's what it was looking like. And so I was very in a tough spot. Here I am, newlywed in Birmingham, Alabama. I did not know a soul really, because here I am. I'm a pilot, and I was commuting back and forth from here to Pittsburgh, to Philly, and Charlotte, what have you. And my wife was a pharmaceutical rep, making $35,000 or $32,000 a year, and we were living in one bedroom apartment in Hoover, Alabama. And I was, looking for work. I was, really, I was trying to find a void to fill that need. I mean, trying to find a need, a job to fill that need, that void that I had financially. Because $760 a month in rent goes real quick when you're making $32,000 a year, and also buying food and all of that. And to be, pretty frank here, I mean, I interviewed with 23, 24 pharmaceutical companies. They will not even touch me. Oh, you're going to go back to be an airline pilot. So bottom line, people will not give me a job. And I started getting very desperate. Went and applied for Uber Toyota, selling cars, Mercedes Benz. No go there. Selling shoes at Parisians. I'm giving you the order of applications. Selling shoes at Parisians for women, and then I get hired there. I fill out an application at Home Depot on Highway 150, and I did not get a call back either. And that's when it started getting really depressed and also very down. Here I am, a type A personality, officer, pilot, and I can't seem to get together. And outside of the military or the airlines, and I saw a newspaper ad that said sheetrocking homes for $10 an hour, and I looked at it. I said, okay, this is honest work. I need a job. So I walked in there, filled out the application, and I gave it to the lady. The lady looked at me and also my resume, which probably was the only guy that gave her a resume. And she looked at it and said, can you sheetrock? Knowing that I don't even have a sheetrock anywhere. I'm like, no, I can't. I don't know how to sheetrock, but I can learn. And she said, sorry, we're just too busy. So I walked out of there feeling pretty low. It's like, geez, life sucks. Do I even matter? This is unbelievable. The demons in my head, telling me, John, you're a piece of crap. You nothing. You got a college degree, you speak 4 languages, you naval officer pilot, but you cannot even get a job sheetrocking homes for $10 an hour. And to make matters worse, I went to the bank to withdraw money to get me a sandwich. Subway sandwich is usually what I used to get, tuna sandwich. Walk in, the ATM kept getting denied. I'm like, what the heck? And I went inside, I said, ma'am, my ATM card's getting denied. What's going on? And she said, sorry, sir, but your ATM card is working. The only problem is you don't have $10, but $10 in your account. I was trying to withdraw $10, $20. She said, you only have 13 cents. And when she said that, I looked at her and said, okay, thank you. I walked out feeling extremely low. I got on my Corolla, drove to the apartment, and Agustina, I just crashed. And I just literally just burned and crashed and just started, I just cried. Quite frankly. Looked up and I just started yelling at the ceiling, nothing works. What the heck's going on? And I just started getting mad at God. I said, hey, God, why am I suffering so much? We can even sometimes buy the stuff that we want. We buy food with credit cards sometimes. And it's just pretty jacked up. And I said, please help me out. I was just begging, help me out. And when I was saying that, I felt right here in my heart just get into real estate, like, this loud sensation. And I looked up to the ceiling, cleared my tears, and I said, real estate, seriously? Because I'm a pilot. And the voice inside of me said again, yes, real estate. So, Agustina, that's what I did. That was April when that happened. So by June, I was selling real estate. I was selling homes. I got my real estate license. At the end of June, I started selling homes in Birmingham. And within 6 months, I transferred to Remax. Within a year, I was Rookie of the Year. 2 years later after that, I opened up my own company, Providence Real Estate. I had 17 brokers working for me and 6 full-time employees, and the market crashed. But thankfully, I was already doing REOs before all of that happened. Literally from the get-go, I had a friend that retired to the beach, and he gave me a BPO and said, hey, here's his broker's price opinion. Learn it. You can learn some REO, real estate owned, stuff and foreclosures, and pay you off one day. and I was already doing very well. But when that happened, when the market crashed in 2007, my business exploded. I had no idea, but I was representing one of the biggest banks, JP Morgan, Aquin, and they loaded me up with business. 1 month alone in October 2007, I made $103,000. And I was just blowing it out of the water, making $500,000 in commissions. And when people were closing doors, I was opening doors. And things kept going. And I had 86, 83 homes for sale that were upside down. And I had the idea to turn them into rentals for my clients. And I started collecting 10% of that income.
Hey, Augustino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
So now I'm making $9,600 a month on residual income as well. And I looked at that and said, wow, I really like this mailbox money. So it got me interested in investments, more and more. And in 2010, I started looking at apartments, thinking about apartments after a trip to Disney World. I was getting bombarded in Disney and calls. And I just felt like this big fat hamster on the wheel. And I'm like, man, if something happens to me, everything is over. Everything is done. And there's nothing that I can do anymore. So bottom line, I started looking at how to create wealth and went to seminars, read books, and I literally went into this mission to find what can I do. And of course, apartments was in the front center of everything. And getting to apartments is my thought. That's all I had in my mind, and one track mind to do apartments. And in 2012, I closed my first deal. The planets aligned. I mean, everything. It's all God. Thank God. It was. I came across a deal and I was helping these guys that lost it, and I was, helping them raise money. I couldn't even raise 150,000. I mean, it was just crazy. But bottom line is, I ended up getting the deal, getting it on the contract, and and ended up doing business with these pro golfers out of Florida, and we bought it in Georgia and in Augusta, Georgia, out of all places, and boom, my business exploded. Within 6 months, we bought almost 800 units. And from then on, I went into, started, gaining more experience, learning more, about the business, started connecting with institutional partners, other funds, family offices. And my business grew from, Georgia, Alabama, North Carolina, Arkansas. I started expanding through the Southeast, and in 2014, I went on my own. I didn't need any more partners. I went on my own and I started buying apartments and managing my own deals with my management company, which became a management. The real estate company became a management company, and started expanding. And we got into development really early into my career. And it was because of my previous partner. I was helping him on a deal, and that's how I got, my feet wet. But really didn't come into play, until 2018, more, getting heavy into apartments, development and doing HUD 221D4 and that kind of development. And, today I'm a certified HUD developer as well from all of that. We have, about 7 projects going currently in several different states, different stages. Some are CO, going through CO, some just broke ground, some are going through the structure and entitlement phase. But we do value add. We just bought a big one in Texas as well. Almost 600 units. So we're constantly doing both. Doing value add, doing development, and also managing and looking to do third party to become also an asset and a value to other developers out there. Us bringing in our, specialty, but also bringing in money and bringing in equity into the deals, because we do that too. So we expanded from that to over 4,000 units, like you mentioned, almost $600 billion in assets and growing. quite frankly, it's been a fun ride. It's not easy. It's a lot of hard work. I go through headaches, all the time, but they're good headaches and good problems because every time I see a problem, as much as I hate it, it turns into an opportunity.
Well, it's worth doing the bigger deals, right? If you're going to get a headache, make it a big headache.
Yeah. So, but it's opportunities, right? And it's growing. And at the end of the day, um, you know, my function and my goal is to really to create more value and to add more value to our people and our staff, but also to other people out there and investors. And I have guys that started with me from just a little $50,000. Now they're investing $250,000. They've grown and they've done well, and that's exciting to me. And of course, I've done well through all of that, and but it's just a matter of growth. I mean, I'm constantly looking to do better and grow, and of course now, I mean, we graduate through different stages in life, and I want to help people too. I want to tell people out there that hey, the American dream is alive and well. No matter what you're doing today, no matter what you face, you can be in the gutter. Heck, I was there. Get out of it and continue to look forward because you are going to encounter problems, period, and challenges. But keep in mind, those challenges and those problems are your bridge to your wealth and to your freedom. Because without them, you can't get there.
Yeah. Well, it's funny, John, because as you're telling your story, especially early on, many of the challenges that you'd face career-wise, I actually had chills because I had the same thing. The only difference was I was working in tech as a C-level executive, right? So as a C-level, big shot, publicly traded companies, all that fun stuff, and I had the same sort of issues, and yeah, I guess you can say that. And I get the impression, and you said this too. You're like an alpha guy. When you're to be a first officer with an airline, as an aspiring pilot myself, I understand that it takes a special type of person to be that person, right? And you kind of have to be in control. You're it's almost like I'm not going to say you're an entrepreneur by default, but it's kind of like you want to be in control. That's because you're responsible for your life and the lives of those around you, right? As a pilot. So I get the impression that you might have always been an entrepreneur. Maybe you just didn't know it, right? But it's one of those things, right? It's like it sounds like it took a lot to overcome some of the demons in your head that you said earlier. It's and I'm sure that many folks out there that want to get in their first deal need to be able to overcome that. And if they're listening to this show right now, it certainly tells me, or it would tell you as well, like that. They're obviously interested in real estate. Real estate it can be the answer for that person listening, right? So it's a matter of just taking that action. That's ultimately what it is, right?
And you can apply this to anything in life. It doesn't have to be just real estate. Investing in yourself and growing yourself is really important. As a pilot, obviously, want to be in control, and you want to make things happen, which can be, can be challenging, especially when things are not going just as you want them to be, because it creates a lot of frustration. You can get down real quick because you're driven by results, right? And when results don't happen right away, it needs to be, you need to graduate to that special level. Like, hey, it's going to be, we're going to make it through. It's going to be good. And there's just a lot of optimistic and faith and involved in all of that. I mean, all of this that I'm telling you, it's an entrepreneur. It's what an entrepreneur goes through. Whatever you're doing, in life. And we do it because we don't want to be or stay where we are.
Well, but it sounds to me like you found your way first doing residential brokerage, but it was until 2012 where you really got the taste of commercial. And it sounds to me like, and this is what I recommend to folks as well, help someone else get to their goal. That's ultimately the best way to do it. And it sounds to me like you're actually able to help those two, I think they were golfers, you said, right? Those two golfers to really shut that deal down, right? If it wasn't for you, they probably would have never been able to do it.
Yeah.
I want to take a pause from today's show to share something that I've been encountering. As I speak to many investors, there's this concern, and the concern is centered around the inflation we've been experiencing and the devaluation of our currency. Now, we've seen some of the highest inflationary periods over the past 30 years. That's up over 8%. Economists actually believe that inflation is closer to 20%. Some say it's even more. Now, what does this mean for you? Well, it means that money that is sitting in your bank account or self-directed IRA that's not invested in physical assets that hedge against inflation are losing buying power. That means that every minute, every second, that dollar is becoming less valuable. You see this every day. You see this in the groceries you buy, the gasoline you buy, everyday items that you're buying on a daily basis are becoming more and more expensive, and you're using a less powerful dollar to buy these items, meaning that dollar is losing value if it isn't put into a property that produces cash flow, just like real estate does. Now, our team here at Bulletproof Cash Flow has put together a series of weekly webinars that cover real estate investing like multifamily, net lease, and real estate development. Now, these are purely educational webinars. In these webinars, we talk about why real estate offers a powerful opportunity right now and why it makes sense to invest in these assets today. So, if you're interested in real estate or want to have the opportunity to get involved as a hedge against inflation yourself, I encourage you to go to bulletproofcashflow.com/webinars. That's bulletproofcashflow.com/webinars. Now you go there, these webinars are 45 minutes and they cover different topics every week. We go over the things you need to know to avoid some of the common pitfalls when it comes to investing while getting you prepared to invest your paper dollars into a real physical asset. Now, if you can't make the webinars, just go ahead and register and we will send you a recording that you can watch at any time. And by the way, these webinars are entirely free. There's no cost to you. This is just something that we do to educate our folks out there. So if you're enjoying this episode, please like and subscribe to Bulletproof Cash Flow. It helps the channel tremendously when you do. Now let's go ahead and get back to the show. And that's a major thing right there. And then you guys went on to do more deals together, which is phenomenal. But that's the point, though, is that you brought something to the table that these guys didn't have, right?
And that's it. I mean, it's creating value at all kinds of different levels, right? And that's the big thing is what do you do from here? What do you do from where you are? Because a lot of times, we're faced with a lot of decisions, right? And those decisions are forks in the road. Which one are you going to take? And life is about decisions. What you did today is going to affect what you're going to do tomorrow. There's a lot that goes into it, right? What are your rituals? What do you do when you get up? And it changes. And it changes all the time as you grow. But investing in yourself is really important. And for me, I mean, from where I came from the city, growing up in the city, a poor city kid, and it's just like a constant graduation of all of that, but I'm constantly fighting that same thing, right? And it's just trying to think bigger and get out of this situation and grow, into another one. And it's the life story, right? But I tell people, don't give up. Do the best you can, but don't give up on your dreams. Keep challenging yourself and learn to live uncomfortable. Because if you're not, the more uncomfortable you are, the more the opportunities, in my opinion. Sometimes, not sometimes, when you're comfortable, that's when it gets really dangerous in life. And
that's right.
And you start, you plateau, and if you're in the hospital and you plateau, you're in trouble.
That's right. You got to get comfortable being uncomfortable. Yeah. That's right. Yeah. That's the way I like to put it.
Yeah.
So let's talk about your deals now. So I know you have a pretty expansive portfolio in a bunch of different places. Maybe let's talk a little bit about some of those markets that you've gone into and why you chose those markets. Like what were some of the things that you saw maybe early on? I know you just did a deal in Texas too. We could talk about that because those deals are hard to come by these days. But let's talk about like how you chose the markets that you're in today.
Well, I mean, I've always been a big proponent of secondary, tertiary markets. I found that to be, even from my rookie years, if you will. I mean, heck, I'm still a rookie. I think there's so much for me to learn. Um, but secondary, tertiary markets, they've proven to be the markets that they get neglected. Not much, not anymore. I think there's a lot of big players that have gotten it through the years. But that's one that I like to look into and also concentrate on. Secondary, tertiary markets, the usual stuff, big box stores, hospitals, good schools, um, good locations, decent locations. Um, Now, several different markets, how do we get into them? There's an array of ways, that we have been able to break into different markets and touching base with different owners and landowners and developers and operators. But I mean, you got to have a good network. Got to have a good network of brokers, lenders, insurance person, people. And other guys like yourself, and myself, and just networking with people, right? At the end of the day, is adding value. I keep repeating that word. What are you going to do to enhance someone else? So we do that. We do that a lot. I mean, there are times that I come into a market, and the only reason why I'm there is because that person cannot get it past the finish line for a number of reasons, and we come in and fill that void, and there we are. We get an asset, and we're partners, and of course, we bring all the different good accolades, if you will, but all the good instruments or tools into the toolbox, and then it grows from there. But at the end, it's just adding value, finding those deficiencies, not deficiencies, but finding the voids um, in those markets where individuals are playing that know it well, but they can't just get past X line, and you help them get there.
Right, right. Well, the thing is, though, when you're saying secondary and tertiary markets, these are secondary and tertiary markets of some pretty big markets, though, right? I mean, like an Austin or something like that. Not necessarily like Mansfield, Ohio. No offense to the guys from Mansfield, but it's like it's kind of like you're targeting secondary and tertiary of much larger, highly visible markets, right?
Yeah, that too. And in some markets, we've gone into for instance, Augusta, Georgia. It's not a big time market, but they have good hospitals there. They got some good economies rolling, that makes sense. Or let's say Birmingham, Alabama. Where we are, a submarket of Birmingham. That people just don't know about. And I mean, heck, there's a property that we bought in 2012 that tried to get New York to come in, and they never, forget about it. We're just not interested. Well, I bought it with those golfers, and we still own it. We did extremely well. Got all of our equity out, and we're still owning it, owning the property, clipping away the nice percentage, on a yearly basis. And I let the New York guys. I used to do it every year, but now I don't do it as much often anymore. Say, hey, look how much we did this year, and remind them, hey, missed a good deal. And we're friends now, but obviously it's become a joke. But bottom line is, you focus on markets that other people are not too focused on, that are the markets. If everyone's going to fish in the same pond, it's going to get saturated. And there's a lot of that going on right now. I mean, a lot of people are running to the big, there's a lot of saturation going on, and it takes creativity and thinking outside the box to look at the opportunities outside of that. So, but I mean, listen, you're going to make money in real estate. Of course, we're in real estate. We're talking about real estate here, but yeah, I tell people you make money in real estate in the up markets and the down markets. You just got to change your perspective.
100%. That's right. That's right. I mean, and that's the thing. I mean, if you're attacking like a market like Austin, for instance, You have everybody is moving to Austin right now because of maybe the job drivers are really strong there. So for us as syndicators, as guys to put deals together, yeah, it's a little tough to buy anything in the heart of Austin. However, to your point, secondary and tertiary markets, folks still need to move here. They still want to move to Austin, but they don't necessarily want to pay the rents in Austin either. There is a market. There is indeed a market for those secondary and tertiary markets, because that's where the next wave of folks are going to go. Not to mention, too, as that city keeps growing, it's going to grow outwards, obviously. So same thing happening in Atlanta, in Buckhead, right? It's only 30 minutes away, but now Buckhead is just as big as Atlanta, in terms of high rises anyway. So it's the same sort of thing, right? And no, it's a very interesting strategy. Very interesting strategy that for the longest time, I was always a proponent of primary markets only, and but now it's starting to make more sense just for the reasons you pointed out. It's like everybody's attacking that market. Not to say that you can't compete. I mean, it shows that there's a lot of interest there, but at the same time too, it's like, man, I think there's a lot of people going over there, and they're just way overpaying for stuff. And I think we're on the same wavelength that we tend to be somewhat conservative when it comes to putting the deals together. I'm not one of those guys that overpays for stuff. I'm just not that guy.
Understood.
You don't want to get burned. Yeah, you don't want to get burned. But aside from that, you're also doing development too, right? So are you picking development deals in the same sort of way? Do you apply the same strategy, or do you adjust the strategy depending on the deal?
No, same. I mean, we come into, those markets and looking at what's the need. Obviously, doing a HUD deal is different than market rate deal. But we're always trying to fill that gap and that need. Obviously, if we see a major saturation in the market, and we'll look at different parameters. We got our, checklist. But the big ones are, saturation, absorption rate, and economic drivers. And if we miss any of those, we're not going to do business there. One of the great things about HUD is, HUD has this extensive amount of due diligence that they do per markets, right? And if HUD says, "Hey, we like that market, we want you to go there," by all means, we're going to try what we can to get there. There are markets that most big players just don't see. There are markets that I've gone into that it's completely under the radar, and I like flying under the radar. I mean, it makes sense to me. Undetected, and once you're there, create all the value and scoop it all up, and let the big boys come in after that and raise the prices and do what they got to do. But it's a good strategy. I feel pretty good about it.
Oh, it works. That's what I did here in Cleveland. I was doing that here when no one else, everybody was avoiding Cleveland. There's one guy that comes to mind. I won't say his name, but he was getting on the circuit, on the podcast circuit, just slamming on Cleveland, hating on Cleveland so much. And I'm like, you keep on doing that. Awesome. That's great. Now I'm in the Rockefeller building, which we bought, and we have Sherwin-Williams right next door. I'm literally looking at one of the cranes through the windows here right now. There's going to be 10,000 new jobs moving in right next door. I'm not worried, right? So yeah, but nowadays, once the word gets out, and I think that's just like you said, you're counting on that. The word is out now. Now there's all kinds of money flying into Cleveland, and but fortunately, we built a track record of success, of closing our deals, and every time we put down an LOI, we close it down. We promise we close it down, and all the brokers know it. So that's what gave us a leg up, and I get the impression that you operate very, very similar way. That you operate with a high degree of integrity. That much I do know, and that speaks volumes, to the brokers that are local in those markets, that they know that you're gonna shut it down, and that's a big deal. That's a very big deal.
Yeah, no, I appreciate that, and it comes with how can I say, that trust comes slowly.
Yeah,
it's not overnight.
Takes years.
And that reputation, and it's important.
Yeah.
And it gets to the point that you start picking who you want to do business with, right? And because it's also very important. We're not just gonna jump into a deal just because we're in desperate need or doing a deal. It's just not going to happen.
That's right. That's right. So what sort of criteria are you using to analyze some of these deals or some of these markets? I mean, aside from getting into these secondary, tertiary markets, are there some specifics that you're looking for? I know you're looking at jobs, but is there anything else you're looking at in terms of like picking those sorts of markets? Like, are you looking for density? Are you looking for like your ability to manage it? Because I know you have the vertical integration with your management group. Like, what other things are you looking at?
Yeah, no, great question. We're looking for population growth, obviously. We're looking for, if it's a value add deal, we're looking for, economics, jobs, big box stores, the Home Depots, Targets, the Walmarts, and the hospitals, also good schools. We're always looking at that. And the good thing about it is, there's so many different reports out there, but that we can have access to. But also looking at the rent growth, in that area and where they're gravitating towards to. We look at Axio, Matrix, you name it. Those are kinds of things that we pay attention to. We also look at believe it or not, weather. Is a propensity to because we have a lot of stuff on the coast. I mean, what about the hurricane? Has it been flooded or floodplains or not? Those are big decisions when we make. We have seen deals that look great, but then we looked at the flood maps and said, "Oh, geez, this deal that's it's in a flood zone. It got flooded 30 years ago. We won't do that. We just, we have a checklist of things that we look for. And and it tweaks, of course, crime. It's another one. What is, the homes around the area, what are they going for? Zillow, what's the market on those rents, on those mortgages, if you will, like the values of those homes. I can go on and on, but I mean, very specifics. We look at the top three. Jobs, schools, and population growth. I mean, that's definitely one of the big ones.
Yeah. No, all those things are very valid too, and I think that's kind of the reason why many of your investor community they just invest with you and get a return as opposed to them trying to do all this work. Because to your point, and you said this earlier at the beginning of the show, it's a lot of work. It's not exactly easy. It's not simple, right? We make it look easy, right? But it's certainly far from it. I'm not complaining either, but it's one of those things that you dedicate your life to it. It takes a high degree of effort to do all this type of stuff. It's not for the faint of heart either. Not for the faint of heart.
No, it's not. I mean, like you said, there's a lot of work that goes into it. We understand, study the market, study the competition, what they're doing, what kind of reno they're putting in. Do you do the same reno? Do you do a little bit less? I mean, can you do organic growth? You name it. I mean, so we're constantly looking at all of that and surround yourself with the right people, from asset management to accounting and I mean, this is a whole team. Okay. There's obviously I'm in the front page of the website, providenceinvestments.com, what have you. But there's the little army behind me that know, have all of this on the grips. And heck, I'm the youngest, if you will, in the deal and the whole platform. I mean, there are people that have been doing this in my firm 20 plus years.
Wow. Yeah.
So that goes to tell you that, I just know how to look at things and have a vision. But when it comes to the details, you got to surround yourself with the right people. And know it well. And of course, you have to have a sense of knowledge of what you're doing and what's going on. And but you need those people there that can definitely close the gap on a lot of things that you don't. Because let's face it, you and I are flying, in the front. It's like what I tell people: I'm flying the airplane. I don't know what the heck is going on row 56B and the passenger on 57A that they're just having they're quarreling about something. I have no clue, nor do I care. My goal is to fly that airplane and land it at the destination safely. That's why we have flight attendants. That's why we have crews and take care of things. So again, I make a lot of analogies when it comes to flying. I mean, when it comes to business with flying, because I always tell people that flying has a lot of similarities when it comes to running a business. And if you want to run a business, if you run a business like you do flying, you're going to do extremely well, because there's checklists, protocols and backups, and you name it, briefing, debriefing.
Oh yeah, a lot of planning. A lot of planning up front. All that stuff. Yes. A lot, and also, of course, a lot of training, and probably one of the most important things is experience too. I think, and it's funny. The minimum requirement for most to become a pilot is usually 50 hours of training. That's the national record, I guess, right? And you have way more than 50 hours of training, right? Because to become a commercial pilot, you need 1,500 hours. And but the more experience you get, the more confident in that person's ability to fly the plane. And it's kind of like the same sort of thing with business, right? You've been through a lot of deals, you've taken down a lot of stuff, you've had a lot of success. There's a high degree there's a high chance of you're going to pick the right market, you're going to take down the right deal, and you're going to make a lot of money for your investors and for yourself. So and that's what people should be looking at investing in. Is betting on the pilot in your case, right?
Right. Yeah.
Excellent. All right, John. Listen, there's been a lot of covered a lot of stuff here today. For someone listening, what sort of bulletproof advice would you offer to them if they were like maybe on the fence about even taking up real estate as a journey for them? What would you tell them?
First and foremost, I always tell people, don't do it for the money. Do it for the passion. Because you said something earlier, which I also say, it's not for the faint of heart. You gotta have guts, Gusto. When things go wrong, money is not going to drive you. You're going to give up. But when you enjoy something and you're following it with passion and desire, and you really enjoy it, you tend to do better. You tend to create, be more creative, and find ways to do things. So you're naturally gifted, if you will, on that. So I would say, do it for the passion, not the purse. Okay. And second, don't give up. People most times they give up too soon. People, when they set out to do something, they hit, one or two obstacles, and it's like that picture on the mine, right? Like the miner keeps, chipping away the dirt, and all of a sudden after 3 years he gives up, and then the next miner comes in. A month later he hits gold. And don't be that guy. And that goes in life, whatever you do. And thirdly, it's stay true to yourself. Hold on to your values, and no matter what, don't stay true to yourself, and hold on to what your belief and who you are, and don't sell yourself short. Be ethical, and do the things that you need to do, and get them done, and of course do the right thing.
Yeah. No, love it. I mean, all those things require commitment. I think it's you really have to have a commitment to excellence and a commitment to success. That's to achieve anything great in life. You got to have that. Yeah, absolutely. All right, guys. Well, if you want to reach out to John, you can reach him via his website at providenceinvestments.com. So hopefully got some insight on how to pick the right markets. Secondary, tertiary markets are a great way to also start if you're obviously an experienced developer or real estate person. But you know what? These days, it's hard to find good deals. It's always a good idea to reach out to someone like John here that's currently doing deals, right? Makes total sense to do that. No need to try to take this on yourself as well. So thanks for tuning in, and I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, head up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.